Hello everyone, welcome back to my financial accounting series. Today, we're going to walk through a whole accounting process, connecting what we learned in the first 3 classes, from preparing journal entries to producing financial statements, primarily income statement and balance sheet. So, stick with me for the next 5 minutes to understand the whole process of financial accounting. In our first class, we covered what financial statements are, especially focusing on the balance sheet and income statement. These are major components of the end product, financial statements of our accounting process. In the second class, we learned about debits and credits and how to prepare journal entries. This is the first step in capturing transactions in our accounting records. In the third class, we learned about accrual basis and how to make adjusting entries at the end of a period. Now, let's connect all these pieces together to see the whole accounting cycle. To capture accounting transactions, we need an accounting system. This can be as simple as using Excel or as advanced as specialized accounting software. It doesn't have to be a complicated system. In a typical accounting system, there is a chart of accounts, which I showed you in our second class. Here, I've created a simple one for demonstration purposes. Typically, each account is assigned a unique account code. For example, asset accounts might start with a 1, liability accounts with a 2. For instance, bank balance might be coded as 11000, sales of goods as 41000, and service income as 42000. Once we have our accounting system in place, we can record accounting transactions by preparing journal entries. When making journal entries, each transaction is assigned a unique number for easy identification, and these numbers should be in sequential order like JV2024010001, JV2024010002, and so on. After ensuring the correctness of the prepared entries, we post them to the general ledger, a process known as posting. General ledger is a master file that contains all journal entries, organized by accounts according to the chart of accounts we set up initially. Let's take the sales of goods account as an example. During the year 2023, all sales transactions are recorded under this account. The first sales entry for the year, JV2024010001, is posted here. Subsequent sales transactions are accumulated in this account throughout the year. For 2023, there are 10 sales transactions totaling $10,000. After posting to the general ledger, at the end of each period, we generate a trial balance. Let's use the year end, the 31st of December 2023, as an example. The trial balance shows all the balances of each account before adjusting entries, so sometimes we refer to it as the unadjusted trial balance. The numbers in the trial balance come from the ending balances of accounts in the general ledger. For example, if during 2023 the company's sales of goods $10,000 would appear in the trial balance. Once we have the trial balance, we prepare any necessary adjusting entries, as we learned in our third class. For example, let's recall deferred revenues. Suppose on the 1st of December 2023, we received $1,500 cash from a customer for a 3-month training course starting in December 2023 and ending in February 2024. We need to make an adjusting entry to recognize the training fee income earned for December 2023. So, 1/3 of that $1,500 should be credited to our service income account, with a corresponding debit to deferred revenue. This entry recognizes our income earned for December 2023 and reduces our liability owed to the customer as of the 31st of December 2023, since we have already provided part of the training service. Next, we post the adjusting entries to the general ledger. To visualize this process, let's start with the unadjusted trial balance. First, we add the figures from the adjusting entries to the unadjusted balances. Finally, we sum these amounts to create the adjusted trial balance. For service income, the initial or unadjusted amount is $28,000. However, after incorporating the impact of adjusting entries, an additional $500 is included. Consequently, the adjusted service income amount becomes $28,500. After all adjusting entries are checked and posted to the general ledger, we can generate an adjusted trial balance. Recall that when setting up our chart of accounts, we categorized each account as an asset, liability, equity, income, or expense. From this, we can create the balance sheet as of the 31st of December 2023 and the income statement for the year 2023. For the income statement, we include revenue and expense accounts. For the balance sheet, we select asset, liability, and equity accounts from the adjusted trial balance. Once the accounts are finalized and agreed upon with the company's auditors, we can close the accounts for the year. This means that all temporary accounts, the income statement accounts, are reset to zero at the beginning of the next accounting period, which starts on the 1st of January 2024. These concepts are covered in detail in my previous classes. If you're not familiar with them, I recommend watching those videos at least once to master the basics. For example, to close a service income account with a credit balance of $28,500, we would debit it with $28,500, offsetting the credit balance entirely and bringing the account balance to zero. Here are the journal entries for closing. The debit and credit balances in the adjusted trial balances are fully offset by the corresponding opposite debits or credits in these closing entries. This process ultimately clears all these account balances. Finally, the net profit or loss for the year 2023 is then transferred to retained earnings under equity on the balance sheet as of the 31st of December 2023. This diagram recaps what we've walked through in today's class, from preparing journal entries to producing balance sheet and income statement. In our next lesson, we'll walk through some typical exam questions, consolidating all we've learned so far. Thank you for watching. If you found this video helpful, please like and share it with. Don't forget to subscribe to stay updated with more accounting tips and tutorials. See you next week.